and Senior Market Analyst Jose Tormo speaking, broadcasting to you live, doing a quick audio and visual check. If you can hear my voice loud and clear and also see the broadcast on your screen, please go ahead and type in the letter Y or the word yes, letting me know that the audio and visual is clear. All right, wonderful. Good to see everybody in the room. Again, good morning, everyone. It's 8:01 a.m. We're now getting started with our 8 a.m. broadcast. We've got a lot to talk about here today. We're going to be talking about awesome opportunity here with the grid trading course, which is new trading technology and what expectations you can have of it. And also, we'll take a look at the live market, take a look at what we went over yesterday in regards to the pound breakout prediction, kind of follow up on that and see what's happening here. And also, how you can begin to use candlestick formations to find higher returns in this market, which is a wonderful opportunity here. But one of the cool things about this is that when it comes time to learning about grid trading, I want you to understand these markets can only move up, down, or sideways. And if you're not choosing to be on the right side of the chart, it can be difficult to enter the market and get involved at the right price point. So by grid trading, it'll take the whole guesswork equation out of that. I'll show you that in the live market a little bit later. But for those of you that currently do not own the grid trading course, type in the word me if that's you. If you do not own the grid trading course, I want you to go ahead and type in the word me and pay it very, very close attention to what I've got to share with you here today as we go through the live markets and talk about these trading opportunities. But some of the expectations, we're going to go live in just a moment, but some of the expectations are this. It's, whatever strategy you're using, it's to help you optimize that strategy and make it much more efficient. It's to help you amplify results. So if you're not used to capturing a lot of pips, get used to it very quickly, because capturing a lot of pips is going to be exactly what you're looking to accomplish here in the markets with the grid trading course. Those of you here who have the following courses, it is considered a must-have for you. If you are a mastermind student with Joshua Martinez, it is a must-have for you to have this. If you are a leveling student with Joshua Martinez, this is a must-have. If you are a target trader with Gary Fickhart, this is also a must-have to help you size into the market as you're going after your targets. It's a wonderful, wonderful strategy, and it's for traders who want to win anywhere between 70 to 90% of the time in the markets. And ultimately, it's for investors who want to take control of the wave movements of this market. Very simple, very easy to understand, very easy to execute, very easy to obey. And as we begin to talk about these opportunities, what I want you to understand is grid trading will help you take advantage of the markets because the markets move in a wave pattern. Okay, so we'll talk about that here in the live market in just a moment. But ultimately, here's some results from yesterday's webinar. If you were with me in yesterday's webinar and saw the opportunities we were looking at with the pound Australian and pound New Zealand with grid trading, you can see that these were opened up based off of taking advantage of the 3 o'clock webinar that we went to yesterday. So for those of you that were with me at the 3 o'clock webinar, those trades ended up closing out. The pound New Zealand ended up closing out for the 126 pips net at around 3:26 a.m. and closed out of the pound Australian here with 102 pips today, basically because I was going to host this webinar and I wanted to make sure I can reset the grids and show you how this works. But for two currency pairs to end up generating over 228 pips since yesterday's webinar, and the price action was one of those price actions where normally we would have to wait for retracements to get in and not have to, force a trade. How many of you see how powerful this can be? Type in a Y or a yes if you see how powerful this can be. And again, you might notice the lot size. This was a lot size of 1 micro lot per level that we sized in on, just to kind of show you how this works. So it was, ultimately around $15, $16 of profit, but you know what? It is the goal, the art form of capturing pips. The money will come when you practice the proper equity management and also the lot size strategy that we're going to be talking about here today. So the grid Mosh is going to be available mid-May. The class is going to be in mid-May, so we're going to be making it available to all of our clients in mid-May. So nobody has yet the grid itself, but I can tell you this. Today's going to be an opportunity like never before because we've got an incredible offer for you in regards to ownership of this tool, not having to pay a monthly fee for it, and also a powerful fast action bonus strategy I want to share with you today on top of all of that information. So let's go here to the right currency pairs in the market. let's see exactly what to do, okay? And let's see what we can do to trade this market and show you how this market works, okay? Now, let's see how this market works and talk about the opportunities at hand. And then let's see here. Michael says, Jose, in one of your examples today, can you pick the wrong direction just to see how the grid does? I mean, I don't know. I don't want to forcefully pick the wrong direction. I don't want to, because we have a lot of traders from different levels here. Some are brand new, some are experienced. So I don't want to give the wrong expectations here. But I can take a look at perhaps the market in an up AB boundary, and then perhaps looking for it to go down to the 382 level as a pullback. You know, because if you're thinking of buying the up AB swing, but it's going to retrace, you know, that could be an example we can look for today. You know, but I don't want to just simply place trades in the wrong direction. That doesn't really make sense. But I will see what I can do to accommodate that request as much as possible, while still staying in the lines of keeping things accurate and keeping things, you know, top notch to learn how to trade the right way the first time around. Okay. So as we're going to be talking about this opportunity here today, it's basically going to be looking at some opportunity here to see how these markets are moving, how to generate a profit, how to consistently find strategy that works, because my goal in every webinar is to help you walk away from the webinar much more intelligent, much more confident about your trading, whether you invest in yourself in that education that we are offering or not. Okay. So now that we're going to be looking for the opportunity to see how this market works, let's take a look at the pound Canadian, pound yen, pound Australian, pound New Zealand, and let's quickly review the pound breakout prediction target price points, and then we'll go ahead here and start moving forward in the direction. So let's see here. Let's see, Anna, if you want to give us a call, that's you know, we can hopefully help you out with that. That's a, you know, I'm trying to read this right now, but with the webinar, I would suggest, Anna, if you want to give us a call, we can speak with you and work with you and see what we can do to take care of that issue for you. Okay, but I did read your question, so again, everybody will be in right around within an hour from right now. So stay patient, Anna, and we'll take care of you. Okay. All right. So pound Canadian monthly time frame. First of all, what I want to do is, did anybody miss yesterday's webinars? Type in the word no if you were not at yesterday's webinars. If you were not in any of yesterday's webinars, type in the word no. Because what we did was we covered the pound breakout prediction target price points. So I want to go ahead and give you those price points right now, and then kind of highlight why we did what we did. So this is the first pound prediction breakout target. What I'll do is I'll also go ahead and jot them down into the chat box so that everybody can have this. So the pound prediction, okay, we have the pound, GBP, Canadian, monthly pound prediction target is the price point of 1.81470. Type in a Y or a yes if you just got that in the chat section, chat box. Okay, so what I'm going to do is I'm going to put these screenshots here. These are the monthly time frames, and then I'll also post in the chat box here exactly what the currency is. Okay, so right now we're looking at a bullish movement in the direction of the price point of 1.81470 in the monthly, and it's because of past support here that we're looking for the market to become a ceiling of resistance at that point for a pullback. So pretty much almost fulfilling that price point there. So we're seeing how this works. Also, the reason why this market appears to be climbing is in the grand scheme of things, when you see how this market works with trend lines and AB boundaries, you can see that we've got here a beautiful king crown formation that's been setting up with a left tip, center tip, and now the market appears to be wanting to pull back to form a right tip, king crown. So that's where we have the opportunity to see that. So type in a Y or a yes if you took a screenshot of this, or if you understand what's happening so far. We're looking at the bullish momentum here of forming the right tip of that crown on the monthly time frame. So overall, long-term, position right now would be looking to go bullish for the pound Canadian, pound Japanese yen monthly time frame. For the pound breakout target is right here. So I'll go ahead and post that in the chat box as well for everybody. We have this target at it's pound JPY. Monthly target is going to be at the price point of 163.04. So I went ahead and sent that out as well. Okay. And once again, one of the reasons why we're looking at this opportunity being 163.04 is because, again, we have a big left tip, center tip, right tip, king crown. Also, just by looking at the possible automated Fibonacci's that are taking place here, we've got an up A-B swing. And as you can see, even though we have a left tip right here, and we have a center tip right here, and this is right now at the moment considered the right tip of the crown. If you look at the Fibonacci swing of the king crown formation here, this would be here the A and this would be the B. So we're anticipating this market to go in the direction of the bulls and then up A, B, C to D extension, right, which would form the left tip, center tip, and right tip of the crown. But since this market doesn't move in a straight line, it moves in a wave pattern. What we've done is we've gone from the C pullback or right tip, and what we've done is we've had the pound prediction target be at the sub A, B, C to D extension here at the price point of 163.08, which is right there at a past level of support that can become resistance as well. Type in a Y or a yes if this makes sense, and if you want to take a screenshot of this. Okay, just kind of give you some confirmation. So we're looking for the pound Japanese yen to rally also there. Let's see here. Pound Australian. On the pound Australian here, as you can see, pretty much same thing that we did with the pound Canadian. Let me go ahead and post the pound Australian price point, which is going to be 1.8293. Just sent that out to everybody in the chat box as well. And as you can see here, let's see. We've got here on the pound Australian monthly trend line break. Market came down, took out the low support. So just like we just saw on the pound Canadian, we've got a beautiful left tip right here. Center tip right here. Market formed a low, and now the market's looking to form a right tip. And that's what we have here so far in regards to why the market's pulling back at the moment, because of the fact that we have a king crown down AB boundary that we're looking to trade the retracement from B to C. Type in a Y or a yes when you have this, and then we'll go to the last one, and then we'll start making our way down to the smaller time frames and looking at how to trade them with AB boundaries and candlestick formations and so on and so forth. So that is the pound Australian. Last but not least, we've got here the pound New Zealand. And the pound New Zealand's price point target is at the following. So let me go ahead and post this in the chat box. Last but not least, it is the price point of 1.88680. And that's for the pound New Zealand. And so all four pound prediction target price points should be now in the chat box. And again, the reason that this market here is also pulling back at the moment is because we see the same thing taking place that we did in the pound Canadian and pound Australian. Market broke a trend line. Okay, so it's looking to return to the backside. We've got past levels of support that can become resistance here, but ultimately, just like we just saw, the pattern is still there. The pattern still remains. We've got a left tip. Let me go ahead here and delete this real quickly. Left tip, center tip. Market's pulling back to form a right tip, king crown scenario as well. Type in a Y or a yes when you have this, and then we'll go ahead and begin our breakdown of the smaller time frames to show you how this works and how to take advantage of it, because some of these pound prediction breakouts targets are already almost being fulfilled. So we're now going to take a look at this, okay, from left to right once again. We've got the pound Canadian monthly, which we took a look at, and the targets to the north. So by breaking it down to the 1 hour time frame, again, what we've done here is we've begun to do the analysis of where the market has begun to take off to the north in regards to the pullback. Okay, so for those of you that are looking at, where do we start our analysis? We started our analysis for the pound Canadian right here on the 1 hour time frame. This is where we began our analysis right there, because we're looking at the market climbing, making higher highs, higher lows towards that pound prediction target. If that makes sense, type in a Y or a yes. So we began our analysis from that low. On the 1 hour time frame, this is what it looks like. Okay, we began with automated Fibonacci's, and they have pretty much painted the way on what's taken place. We've drawn our long-term outer and inner trend lines here, and so the most recent AB boundary here, as you can see, is going to be for the 60-minute time frame. 1.65130 is the A, 1.72759 is the B, and as you can see, the C pullback very shallow here, and as the market's rallying and retracing, as long as we stay above the inner, outer, and long-term trend lines, obviously we'll be bullish. If this inner trend line breaks, we may have the possibility to retrace down towards the outer trend line or 382 bounce before climbing back up. But here's the pound prediction breakout price point target. Here's the Fibonacci D extension here of this movement, which is at 1.77474. And so from the live market to fulfill the pound prediction target, we've got about 724 pips left. Remain from the live market price. So that's a lot of pips. And so how do we take advantage of that here in this scenario? Well, the topic of the discussion here is using candlestick formations to find higher returns. So as long as the market stay above these trend lines, look to turn on your bullish candlestick formations. What formations are you more comfortable with? Are you comfortable with bullish engulfing? Are you comfortable with morning stars? Right? For me, I like to go ahead and hit the settings button, go to my tools, and where the bullish formations are, I turn them from a forest green. I like to put them onto a neon green so they can stand out and they pop on the charts. And then what I do is I just go ahead and turn on maybe bullish engulfing and morning stars, which are the ones that I normally trade the most. And as you can see, when you turn them on, what you're looking at here is using candlestick formations for higher returns. Now, are every candlestick formations you trade going to be successful? No. But the reality is, what you have to realize is they are the entry into the market. And so by placing your stop loss 10 pips below the formation plus the spread, okay, you're giving yourself good risk versus reward to trade. And if you do that over and over again, what you're going to be doing here is getting an opportunity to eventually, if you do take a couple of break-evens or small losses along the way, begin to dominate from C to D. Because as you can see, type in a Y or a yes if you can see the candlestick formations taking place as far as entry into the market. They're giving you opportunity to profit. Here's some more down here that fulfill the C to D. And so what we're looking here to do is to keep things easy to understand, easy to execute, and easy to obey, right? Well, that's one way to take advantage of the market, is just to trade with candlestick formations along the way and place your stop loss 10 pips below them, and then go towards the D extension as your limit, or go 1 to 2 risk versus reward per candlestick formation. But again, at the end of the day, formations are just that. They're sign language of the market telling you where the market's going to go. Does it mean the market's going to go that way right now? Maybe, maybe not. Every formation gets tested 50% of the time. So what I want to do here is I want to go ahead and keep things simple, and also show you how the grid trading strategy works. One of the grid trading strategy works here to help you take advantage of this, because look, if you would have gotten into the candlestick formations, the markets would have gone against you, perhaps stopped you out, then gone in your favor, and then you get frustrated. Okay? So what we're looking to accomplish here is this. This is the most recent AB boundary of the 1 hour time frame. True or false? Okay? Now I know the 80-20 rule, and I know this market, if it doesn't hit the 382, it can rally and retrace back down. But if it stays above this trend line, is it going to the D extension? Yes or no? I mean, that's the reality of the situation, right? So there's always a plan and a backup plan. So I know that Josh is going to teach a couple things in the grid trading course, and you won't have the grid trading course right now anyway, so this is more of a learning experience for you to get excited about it. But you can always set alarms on trend lines so that if you're in a grid trade and the alarms break, you can begin to go ahead and completely take your trades off the table and reverse the grid and start heading towards the 382 pullback as the market waves, which is fantastic. So it's going to be a simple way to formulate a plan of attack. But why is this, grid trading course going to be fantastic for you? Because listen, typically the markets revisit the same price point anywhere between 5 to 10 times plus. Some occasions, the same price points revisited over a course of 20 years. So what grid trading is going to do is take advantage of that concept. The reason that this happens is because of the imports and exports that happen. So for right now, we believe that this market's going to climb 300 pips because it stays above the inner trend line. It's at a buy low price point, 300 pips. Okay? So if we believe the market's going to climb 300 pips, well, there's many different ways the market can rally towards that 300 pip opportunity, right? For example, this market from the live market right here, it can do a couple things. It can rally, retrace, and extend. Okay? It can go sideways, break the trend line, pull back, and then rally. Okay? Or it could just simply put retrace and extend very aggressively. A couple different scenarios to head towards that target. Having a yes if that makes sense. Not just one way, it could be a couple different ways the market can go. So there's different scenarios. So now with a mathematical equation, to scale into the market appropriately, we're going to be doing ourselves a huge favor. And if the market does go against us, then we'll be able to add to the position appropriately so we can take advantage of the waves in the market or the grid. Okay? When investors do this, it's very difficult to lose. So let me show you what I mean by this as we go ahead and move forward. So again, let me open up here the next 1 hour time frame of the pound Canadian, which the formula is very simple. We're going to go ahead and use a couple of different steps because if we want to learn the grid of the formula, okay, what I'm going to do here is I'm going to go ahead and write it out so you can see it. And so essentially what the formula is to establish the distance between the levels of the grid for this particular time frame. So step number one is the following. Step number one is to use 500 bars of memory on your chart. Step number two is to go ahead and measure the highest and lowest point. Of that time frame that you're using. Doesn't matter if it's 10 minute, 15 minute, 30 minute, 1 hour, it's of that time frame high and low. Then what we're going to do here is measure the distance between the high and the low in pips. Next step would be to multiply that number by 3. Okay? Then step number 5 would be to divide that number by 2. And finally, step number 6 would be to divide that number by 10. So essentially, when you do this formula, when done right, you have established the distance between the levels of the grid for that time frame. Happen to wire, yes, this makes sense so far. Right, so this is the same D extension that we've got here of that 1 hour time frame. And so by doing the calculations here, essentially what we're looking for is what is the highest and lowest points of this grid on a 500 bar memory. So again, you can see that I've compressed my charts. This is the highest point right here. And this is the lowest point right here. So we've done that. Now we're going to measure it in pips. So we take our ruler tool, and we measure it. Okay. Click on that, and you can see it's 980 pips. So now that we have 980 pips, we multiply that number by 3. And so when we get 980 pips and we multiply that by 3, let me pull up the calculator here. We get 2,940 pips. So we take 2,940 pips and we divide that number by 2. It gives us 1,470 pips. So we take 1,470 pips and we divide that by 10. And what that does, that gives us the final number, 147 pips. Okay, so 147 pips is the distance between the levels of the grid for this time frame, pound Canadian, on the 1 hour time frame. Type in a Y or a yes if this makes sense. Okay, so since we are, again, like I said, believing the market to climb up to strike that 300 plus pip move, we're going to go ahead and set up the matrix to be bullish. And so again, you have many different levels. Joshua Martinez will teach you all about how many levels you need and why. And again, I'm going to set 10 just for the purposes of demonstration. The lots per level, you can accumulate however many lots you want per level, which your equity management plan has in store for you. And then as far as the pending orders, you can have them one-sided, above the market, below the market. Right now I'm going to do both sides since the market does wave, and I'm going to be looking to buy. And so what I want to do is, since I know right now that the market's going to be giving me levels of 147 pips, number one, I can go ahead and place a hard stop and a hard limit at the target, which Josh will show you how to do all that for position trades. But for right now, I want to show traders who don't know how to make a profit yet how to focus on making that 147 pips, which is so the market closes you out. Just like I showed you at the beginning of the webinar, how my pound New Zealand currency pair closed me out for net profits. For net pips, that's what I'm going to show you here, but with 147 pips. I want it to close me out, the distance between each levels. Okay, so 147 pips, period, is what I want to make before this market begins to go ahead and fulfill my next trade. So with one click of a button here, there's my levels. Okay, 147 pips is the levels. And so now what we want to focus in on is the following. Okay, 147 pips is the levels. So where is that 1 hour time frame I just had here, right? As you can see right here, this is the 1 hour time frame with Fibonacci's. As of right now, okay, as of right now, this market moves in an A, B, C to D pattern. So if we identified a counter trend line break or whatnot, here we know for a fact that until further notice, this is the C pullback and this is the D extension. True or false? True or false? True, right? So what I'm going to do right now is I'm going to go ahead here and show you how these levels look on the screen with the fibs. And as you can see here, once the market identifies a C pullback, here's how simple this can be now. So far, with the Fibonacci swing, if you were to trade the AB boundary and then get in on the level from C to D, because this is going to be the C to D wave movement anyways here, okay? Here's the C, here's the D. So far, okay, as far as risk versus reward, Dave, you will have to plan out the risk versus reward for different positions because there's going to be position strategy, there's going to be a scalping strategy, and there's also going to be a swing trading strategy. So Josh has all that covered. He's going to be giving handouts, he's going to be giving plans for that. And for those traders that are worried about the market going against them, you know, the reality is you're going to be having a proper equity management plan anyways. So the market going against you doesn't really matter, okay? And so this is where we see the market here taking advantage of this. So here's where it gets interesting, okay? Because What if the market does go against you to a deeper C, right? Well, the markets have these levels for a reason, because each level is 147 pips, right? 147 pips is the levels. So from the entry that we originally had here, okay, you can see that the entry took us in, struck the next level, 147 pips net would have been made. Done. On your way to that D extension, 147 pips net. Then since we are still above the trend line and we know we want to go to the D, we would resize or re-enter our position to get involved there. Ultimately, you see we're already in there. And so if the market climbs up once again here, we make another 147 pips net. But what happens if the market does, retrace, right? What if it from the live market goes down like this, pulls back deeper to the outer trend line, okay? Well, then you'll be sized into the market once again with equity management here and also here. And so now what will happen is if you're looking to make 147 pips net, okay, then take a look at how this works out, because now the market is in two different sized in positions. So if this market comes up like this, and this third trade makes 147 pips, well, guess what? Now your second trade's at break even. Your first trade is down 147 pips, but your third trade's up 147 pips. So you're at zero. You're at break even right there across the board. And then if this market does this, boom, you make your 147 pips net. Done. And then you're resizing the market once again. Type in a yes if that makes sense, as far as, yes, this market might go against me, but at least I have a plan now that it doesn't have to go all the way above my break-even trade to make me the profit I want to make, okay? Eric, I believe this is going to be a fantastic strategy for the slower volatility months, like the summer months, because think about it, the summer months move in more of a sideways range, right? And so if the markets are moving in more of a sideways range, these levels are going to be fantastic entry points all along the way to help you capitalize on the movements. So yes, I thoroughly believe that it's going to be a wonderful, wonderful opportunity for traders to begin just dominating in the summer months like never before, okay? So that's what we're seeing so far here as far as the strategy to get involved with the leveling, the sizing strategy right now on the most recent market movement for the pound Canadian. Now again, if you were to take a look at, if I had to show you results, over and over as far as, past market movement, then what I can do here is I can obviously go back and I can show you how these levels work, right? So, for example, with a 500 bar opportunity, here would be an entry point, for example, right there. You make 147 pips net right there, no problem. Then you size back in right here, okay? Market goes sideways, comes back down, sizes you back in. There's your original trade. So when the market strikes this level right here, you just made 147 pips net because this one was now break even. This one made 147 pips. Those two entries are done. Size back in, 147 pips net. 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 And then the market comes up, 147 pips net, and now you're sized back in. So you've got 1, 2, 3, 4, 5, 6, 7. 147 times 7. That's over 1,000 pips right there. Was it 1,029 pips? In the last, what, 1, 2, 3, 4, 5, 6, 7 trades. Having a wire a yes if you like how this works so far. And I haven't even shown you the rest of the pairs. I'm just showing you pound Canadian here at the moment. And there's the D extension that we're looking to go after. Now, here's how this is now taking place in the market moving forward, okay? So we've done the pound Canadian, okay? And as you can see, everything here is lining up. Pound Japanese yen, as we take a look at the pound Japanese yen, Monthly time frames giving us an up A, B, C, D swing wave movement to the pound breakout target. So by looking at the smaller time frames, such as the 1 hour chart, what we're looking for here is we're looking for the market to fulfill our up A, B, C, D swing. Now you can see here, there's the pound prediction target right there on the pound Japanese yen on a 1 hour chart. As of right now, this is the up A, B, C, D swing, okay, that we're seeing here. Now Clarence says, Jose, at what point do you stop sizing in and get out because the market changes direction? Well, that's why we got a class on this, Clarence. That's why we have the actual course. It's a course. So you're going to be learning all this. You know, that's why everybody who's signed up already is going to have a wonderful time with this and learn all these strategies. Because I'm not here to give you all the strategies the class is going to teach you. I'm here to show you how this works. Okay. So here's how this is going to be taking place. And as far as how to reset the grid, which can take a matter of seconds, and when to reset the grids, all that's going to be taught by Josh. When to reverse the grids. Remember, it's all going to be taught by Josh. I'm just showing you how this works. Okay. So here we have the most recent up AB swing of the 1 hour time frame for the pound Japanese yen, which is 138.319, 141.716 the B. C pullback into the 5.0. D extension here is looking to be fulfilled at 143.815. So type in a Y or a yes if we have established here so far the C pullback and the D extension. Yeah, right. Sam, the class is going to be in mid-May. Okay, mid-May is going to be the class. Okay, so what we're seeing here is we're seeing the opportunity to see the up AB boundary, and as long as the markets stay above the uptrend line, as long as they're trending, then the bulls are still in control. Until any of that changes, the bulls are still in control, right? And so as we start to see how this works, now that we know what the C to D wave movement is, let's go ahead and take a look and see what the size-in strategy here would perform. And as you can see, there's a lot of opportunity here to capitalize on this movement. What I'm going to do is now the levels are different than what I had before, but you can see a lot of pips have been capitalized on. But the same formula, okay, is going to be taking place here, in where we're going to bring in 500 bars of memory right there, and then we're going to compress our charts. And this is a great demonstration because I want to show you buy entry from here, and true or false, the market go all the way down against you here several times before it went up. So this is a great opportunity to show what was asked earlier as far as you picked the wrong direction, right? This is a great way to show you it going against you before it goes for you. But let's go ahead and pick the formula out, which is this is the highest point of the chart, this is the lowest point of the chart. And we'll measure it, and it ends up being right around 764 pips. So we'll take 764 times 3, divide that by 2, divide that by 10, 114 pip levels, okay? So the D extension is still up here, so we're going to go ahead and put that on the matrix as 114 pip levels. Both sides of the market, buy, and close this out after 114 pips in the market. So let's show you, for example, what if we would have gotten in here and the D extension's right there because the market goes against you. So would you like to see how this worked out as the market's going against you, folks? Type in a Y or a yes if you want to see that. And remember, the larger the time frame, the larger the grid. The smaller the time frame, smaller the grid. So you can do this on 10-minute, 15-minute time frames. Any time frame these grids can be traded on, okay? So every one of these grids are going to be 114 pips in distance, okay? So as we zoom in, what I want to go ahead and here do is go ahead and show you, let's say for the purposes of demonstration, the market comes down, takes you in right there buying, right? So here's our buy entry because we got size into the market buying, okay? It tagged us. And the market climbs up and strikes 114 pips. Okay, so we made 114 pips net right there. Then we get resized into the market because our target is obviously bullish to the north. So we get sized in, it goes against us first, goes for us, another 114 pips net. We're feeling good, right? Making some profit. resizing the market right here, which is going to be here our most recent trade. Then this market comes sideways, goes down, and then takes us in at a retracement. Comes back down, takes us in at another retracement. So we're sizing in appropriately with equity management, okay? So let me show you how this works here. We're looking to make nothing more than 114 pips net. That's all we're looking to make here, 114 pips net. So as you can see right here, this market comes up, makes 114 pips right there. And this first trade is now at zero. I'm sorry, this first trade's down 114 pips. The second trade's at break even. Third trade's up 114 pips. And then that makes this a zero trade right now. It's at break even. It's right there, you're at break even after 3 sized in positions. Okay. Then the market comes back down like this. As it moves sideways, right? We're wondering when we're going to be paid out, what's going to happen here. As far as stop losses, clearance, all that's going to be taught in class. But yes, there's stops and limits to everything. Okay, the market comes in, sizes us in once again. And so now, what we have to focus in on here is where's the original trade. This is the original trade. I'm going to mark it off here with a black horizontal line, just so you see it. So we've been sized in not once, not twice, but 3 times now, okay? And so as this market comes up like this, okay, now we are down 114 pips only. Then it comes up right here. So our third trade is up 114 pips, okay? So 114 pips here. Then this sized in level is at now 114 pips. This first trade is down 114 pips. And this second trade is at break even. Okay? So, break even is 0. 114 pips minus 114 pips is 0, which leaves us with a net 114 pips that we made on the trade. Type in a Y or a yes if you see how the market going against you, you still made your profit, and you didn't even have to break through the original trade you were in the first place. See, that's how powerful this is, because now, because of the size in and the appropriateness of getting involved with the waves of the market, you can see how awesome this can be. Okay. Now this would have been here, Peggy. This would have been 31st to the 18th, so would have been within about 2 weeks, 2.5 weeks. It's a 1 hour time frame, 3 weeks maybe, if that. But that's in the market going against you and taking advantage of the trade like that. So that's what we see so far, 114 pips net. And then once you are right here for the 114 pips net, guess what happens? Okay? You are sized back in because the target is still to the north, trade bullish. Okay, so right there you'd be taking in a trade. And then there's 114 pips net. Right away. Then you're sized in once again in the market. And the market hits another 114 pips net. And you're resizing in the market once again. Okay, the market strikes another 114 pips net for you right there. So you resize back into the market. And right now, 114 pips net would have been fulfilled with this most recent movement here. And then now we're resized into the market. And if we have a hard limit at 143.815, we'll be taken out. If not, when the market strikes the next 114 pip move, or if it retraces and gives us 114 pips net, we'll be out of the trade altogether before the D extensions even hit. Tap in a Y or a yes if you like here what you see so far as how this works and how this can work for you. 1, 2, 3, 4, 5, 6, 7. So we got 114 times 7 is 802 pips in the last 7 trades there. And so just an awesome opportunity here to start making some serious profit there. And as you can see, this is what the levels look like with the A, B, C, D wave movement. And since we know where the C pullback is, here the market would have sized this in right here. 147, what was it, 114 divided by 7. Yeah, 114 pips here. Size back in, 114 pips here. So far from C to D, we would have made 114 pips twice. And now we're in our third position to get back in from C to D. So what we have here was an opportunity to go from C to D, where this market here was looking to generate 286 pips from our original entry. But so far, as you can see, we'd be up 223 out of that, which is fantastic in regards to taking advantage of the swings here. If the market waves against you, you'll be sized in. Before the market strikes the D, you'll be limited out with 114 pips net. How many of you see how powerful this is with Fibonacci's, with trend lines, and just the overall take advantage of the waves in the market? Yeah, it's pretty awesome, right? Let's keep on going here, okay? So that's what we do there with the pound Japanese yen, okay? So far, how many people like the grid trading methodology so far? This is just an example. You're going to be taught 3 different strategies with it. You're going to be taught how to use it, how to reverse the position from bullish to bearish, how to use it on one side, how to use it both sides. I know I'm showing bullish movement right now, but it's the same way if you want to sell in the downtrend, or if you want to do a retracement to the 382, you just place the sell order and the same type of grid, methodology, and you'll be sized in as the market retraces. So pound Australian, you can see the market here is climbing towards the north, towards that pound breakout target of 1.8293. And so we've linked that here to the 1-hour time frame, and this is the up A, B, C, D swing. This is the pound breakout. What was it here? 1.8293, right? Is that what it was? Pound Australian. 1.82930. Yes. So 1.82. $930 is the pound breakout target prediction. So there's a pound breakout target right there. And as of right now, you can see the market here climbing, making higher highs, higher lows. But this is the most recent 60-minute time frame A, B, C to D wave movement. Okay. So in this particular instance, we're seeing this market here give us the 80-20 rule, where it came down before the 382, popped up above the 127, came back in the boundary, and now is heading towards the D extensions. That's part of the 80-20 rule as well. But even in this 80-20 rule, still, some traders probably wouldn't have taken this trade because they're expecting it to go all the way down to the 382 or 50. So they would have missed out on this move. Type in a yes if that perhaps would have been you, passing up on this move and not taking advantage of it because you wanted it to go down deeper before you bought it. And that's a possibility here that now grid trading can eliminate from the table for you and help you to capitalize on. So as you can see, as of right now, we've got our C to D wave movement right here established at the moment. There's the C, there's the D. And so what we want to focus in right now is how does the grid trading strategy work for this? So, as you can see, a lot of profits being made as this market was rallying. It was 139 pip grid, but I'm going to go ahead and take advantage of changing this up here to see what it is now. Okay, this is the 500 bars of memory. So this would be the highest point, this would be the lowest point, so we'll measure it from the low. to the highest point is 974 pips. So we'll do the formula here. 974 times 3, divide that by 2, divide that by 10, 146 pip levels. So again, our target's to the north. Take the matrix. $146 pips. We'll close out our trades when we make 146 pips. And as you can see, both sides of the market still buying because the extension's bullish, which is fantastic because look, the market here is at a sell high price point, but sometimes that sell high is not going to go all the way down how far we think. So a sell high price point doesn't necessarily mean, we can't buy. It just means we want to wait for the market to retrace a bit. What better way to take advantage of the market sizing you in than taking you in as it's retracing, and the moment it starts to come back up, you get paid out before you even strike your D. Beautiful way to capitalize on that. One click of a button here, and as you can see, the grids are back on. And as far as looking at C to D wave movements here, first of all, what we can see is very simple. Take a look, 146 pip, right? Yep, 146 pips in movement. So here we have the market sizing us in, comes down, strikes it, sizes us in, goes sideways, strikes it, sizes us in, sideways, strikes it, sizes us in, sizes us in. So when it hits this break-even trade right here, this was the net trade, so it sizes us in right there. Again, again, and now again. So 146 pips net. Here, 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 and for these two right here, right here, right here, and right here. And now we're in our most recent position right there. So we've got 1, 2, 3, 4, 5, 6, 7 times 146. That's 1,022 pips in the last 7 trades. Huge opportunity here to take advantage of this market. Type in a Y or a yes if you like how that works. Got in, market went against us, right? Didn't panic, got sized in. By the time this trade paid out, this was break even. We made our pips net. Wonderful opportunity. How does that look here on the swing from C to D? Well, from C to D, if we had a trend line break like this, right, to keep things simple, this would have been the trend line break right there. If anything, you would add your inner and outer trend line breaks. When those broke, you set the grids up. With the grid being set up, you'd have been taken in right here, paid out 146 pips, and now you're back in again. So 146 pips net out of 194 pips of opportunity you're going after, 146 pips net of the swing so far being taken, and now resizing in to see how this market works. You like how this works so far, folks? Type in a Y or a yes. I mean, to me, it's a no-brainer. To me, technology is here. We've got the opportunity now for anyone who wants to win 70 to 90% of their trades by taking control of the wave movements. And again, if you own the mastermind, if you own the leveling, or the target trading, this is a must. This works on any pair, on any time frame. And the reality is you don't need to know much about trading to be successful once you learn this grid formula, which is wonderful as you divide this market into buy zones and sell zones. Okay? So awesome opportunity there for the pound Australian. And so now pound New Zealand on the monthly time frame. See the market climbing up close towards its target, very close towards the pound prediction target here. So if we break this down to the 1 hour time frame, you can see that we've got here so far, the pound prediction target is right around the next 618 level. We just fulfilled right now, literally right now, the 618D extension of this most recent movement. So a new AB boundary here is being formed as we speak. So it's a wonderful opportunity to show you how that works here. And as you can see, the 618 was just hit literally within this last hour, which basically is almost up now. And so the market here is looking to formulate a new AB swing here to take advantage of. And the reality is, with this market movement, what do we see? We see this market here in a position to help us out with either number one, a retracement to the 382, or a continuation up towards that target, which would be part of the 80-20 rule that can take place. This market hasn't formed a high yet, two to the left or two to the right. Has not formed a high yet, so without forming a high, it could still continue to extend. These Fibonacci's just haven't yet formed a high. These auto fibs are capturing that movement. So we see the pound prediction target, we see the D extension. You know, one of the cool things about that is that when you take a look at the formula, here was the grids, and so far as you can see, the most recent entry would have paid out beautifully there. But let's take a look and see how this would have worked, you know, in regards to sizing in the market here. 500 bars of memory. This is the lowest point. It's the highest point right here. It's a 985 pip move times 3 divided by 2 divided by 10. 147 pips as the grid. So as of right now, if you're going after the pound breakout prediction target, if you're going after the D extension of this next AB swing, right, then sizing in would be an appropriate way to take advantage of this market, as the markets are still above the trend line, both sides of the market in case the market does fall. 147 pips to help you size in. And now you have the grid there. And you can see if the markets are climbing, okay, take a look and see how this works. Here you've been sized in, 147 pips, sized in, 147 pips, sized in, and now we have another trade right there that took us in appropriately. We scaled in, and then right there, 147 pips net for those two, sized in, sized in, sized in, right there. That would have been here net 147 pips. So we've been sized in once again right here. And let's just say for the purposes of demonstration, that took us in right there, sideways movement. Sized in, sized in, and now we're back sized in once again. So this right here, check this out. This is how this would have worked out for us. 147 pips. Net right there. Right there. These two right here. Okay? Right there. Right there. These two right here. These two right here. Right there. And right there. And now we're back into position. So even in sideways movement, check out how sideways movement, we made this opportunity a reality for ourselves. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 147 in the last 9 trades. 1,329 pips in the last trades. 1,329 pips in the last 9 trades. Do you see how this works? Type in a yes. Now, as you can see, if this market does retrace down towards the 236 or 382, there is a level for us to size into the market, okay? So if we get taken in and we get sized in right there, the 236 or 382 level, by the time it comes back up to the B, we made our 147 pips net. Simple as that. Because this market moves in a wave pattern. Now, this is the grid trading formula to help you begin dominating the market landscape, to begin dividing the market into buy zones and sell zones manually to trade. You can trade alerts, you can trade signals. This optimizes any strategy you have, amplifies your results, and it takes advantage of the principle that price points will be revisited again and again and again. So what you're going to learn is the formula to establish the distance between the levels of the grid for a specific time frame, and then how to scale into the market to maximize profits by taking advantage of these waves up and down. And your trade orders will be closed on net profits, net pips. So that's what we see here in this particular example. So type in a Y or a yes if you like what you see and you want to find out how you can own this tool and have lifetime access. Because what I'm going to do is I'm going to show you a strategy now in a 15-minute time frame that I want everybody to know is going to be a nice little bonus strategy here to help you, whether it's a European session or you're trading 24 hours a day. You know, it really doesn't matter. But here's what I want to do. Today, I want to ask you a question before I show you these 15-minute strategies on two currencies. First of all, do you see how this can help you generate an income in the market with simplicity? Type in a yes if you do. Okay? Because again, what this can do for you is this can begin to help you generate reliable, consistent income where it's made over 1,300 pips so far in the pound New Zealand in the last 9 trades, over 1,000 pips in the last 7 trades on the pound Australian, over 1,000 pips in the last 7 trades on the pound Canadian, and over 800 plus pips on the pound Japanese yen so far in the last couple of trades as well. So what we did was we opened this up to our early bird traders to give them the early bird discount on this course, the launch price, and we offered this tool, the matrix tool, this tool right here, okay? This matrix tool, we offered this tool for those that got involved in the grid trading course. We offered them this tool to be on their charting software for life, and they don't have to pay for the monthly maintenance to have it on their charting software. How many people in this room would want to still have access? Because I think I have enough. For the people that are in this room, I still have enough to make this a reality for you. How many of you would like to have access to this tool for life? Type in the word me or yes if that's you. And not have to pay a monthly maintenance for it, not have to pay a fee for it, never have to pay reoccurring charges for it, nothing like that, okay? So it's the matrix tool. So I'm going to show you something right now, and then I'm going to come right back here because it's only 9:04. This webinar is over at 9:30, so I got plenty of time here. I'm going to show you something really quickly, and then I'm going to go into the 15-minute time frame, okay, to show you the strategy. So one of the most powerful things I want you to understand is this, okay? This course is going to be for anybody here who wants to make anywhere between 70 to 90% of their trades victorious. That's saying something big, okay? But today, since I've got this opportunity here for you, okay, yes, we can have payment plans available to you if you need one. You know, we can work with you. We have payment structured plans available, or you can pay it as a one-time payment. Doesn't matter. What I'm going to do for you today is fantastic, because I'm going to give you this new education, because it'll come with you with a no excuses, 30-day, 100% money-back satisfaction guarantee. So what I want you to do right now is if you want the matrix tool for life and you want a 30-day guarantee that basically says, hey, you guys say you're so confident this works that I want it. Give it to me risk-free for the next 30 days. That way, I don't have to sit here and take your word for it, Jose. I can take it, I can try it out, I can test it out right there on my computer. And again, I'll have the chance to see it work, and I decide whether it's the right program for me. Because let's face it, folks, at the end of the day, the only person you're going to trust is yourself, right? All we ask is that you give it an honest effort. So let's do this. Your timing is phenomenal. I'm going to go back to the live market right now. But what I want to do is I want to give everybody here at least 2 minutes to go ahead and type in their telephone numbers right now if they want this opportunity to become a reality for them and their trading. So the timer starts now. I'm just going to give 2 minutes to go ahead and call out telephone numbers to let you know, hey, we see your number. We'll reach out to you at the end of the webinar. And then what I'm going to show you next is going to be a bonus in the live market that you're going to get with this course today. But I'm going to show it to you in a 15-minute time frame because it's a wonderful opportunity here to begin dominating the markets in the European session, or just simply put as a trader, okay? So, Michael, the 30 days begins after the class. So when you have the grids, 30 days after that. It's not going to be 30 days from right now. That doesn't make any sense if you don't have it. It's going to be 30 days from when you get the grids to determine whether or not you like it, whether or not it's making you money. And again, what's the worst that can happen? You test it out with micro lots to see if it works, and if it works fantastically, you're not going to want to return that bad boy. You're going to want to go back to the way that you were trading with mini lots or standard lots and start making a huge opportunity a reality for you. So, Lulia, thank you for your number. I see you. Manny and Mark, thank you for your telephone number. Julia, thank you. I see Grant. I see Jimbo, thank you for your telephone number. Thomas, thank you for your number. George, I see you as well. Margaret, I see you. Barbs, thank you as well. Stephen, thank you. David, thank you for your number as well. Drew, thank you. Frank says, I'll talk with someone. That's all we ask, Frank. Just have a conversation, my friend. Thank you for that. I appreciate the trust. And Michael, thank you for your telephone number as well. We've got Sam, thank you for your number. And again, folks, we got 30 seconds left before I go back to the live market and show you this powerful bonus strategy you're going to get today as well for free. The cost, Stephen, of the entire course, just so you know, is going to be the following. It's a $3,495 course, but today we're giving it away for the low price of $2,245, saving you $1,250 up front, and we also have payment structured plans available. 30-day money-back satisfaction guarantee. Wonderful opportunity for you to take advantage of this opportunity before it's too late. Bobby, thank you for your telephone number as well. Thank you, Christopher, and that's 2 minutes right there. So you can continue to type in your numbers. Thank you, Ronald. Okay. Continue typing your telephone numbers, guys. Let's go back to the live market. Let's show you this final strategy I wanted to look at. But again, 30 days to test this out. Okay. Imagine what you can do in 30 days on any time frame. 15-minute time frame grids, 1 hour time frame grids, whatever the case may be. Powerful opportunity here, folks. Powerful. So that's what we're going to be delivering here, but it's only going to be for a limited time because we only have a little bit about a limited amount available before this tool is no longer going to be free because we're almost maxed out on that. So if you really want to take action with it, if you really want to have the opportunity to be receiving this tool for free, type in your number so we can help you out. Okay. Now, why am I showing you this strategy that's going to be for a 15-minute time frame to help you take advantage of the markets in the European session? Well, first of all, this strategy here that I'm showing you works on all time frames, and it works on all currency pairs as well. It's my man versus pip system, but I want to also show you a European session strategy because since I used to trade in the Euro session for Analyst on Demand, for those of you that when you first started with MTI, if you remember, the first Analysts on Demand were myself, Joshua Martinez, and Jeff Watkins. We're the first AOD, cast. So I used to send out trades every single day. Well, not every day, but whenever the trade setups aligned like this, and made sure that everybody here took advantage of the markets as much as possible. So they'd be more scalping trades than anything else. Sometimes we locked in profit, along the way, and we made more profit than the scalps. Sometimes we stuck with the, risk versus reward. But this is how this works on this particular chart. I want to show you how this works on this because at the end of the day, it's all about strategy. It's all about taking advantage of capturing pips. So we already see here the D extension that's mapped down the 1 hour time frame for the 15-minute time frame. That's great, right? I mean, that's fantastic. It's there. But I'm not really focused on the D extension at the moment. What I'm here to show you what to do is the strategy in the European session. First of all, what you're looking at is you're looking at a computerized trend line. And again, everything that I talk about right now is going to be delivered to you when you enroll in the grid trading course. It's going to be delivered to you, the system, the rules, everything in writing is going to be delivered to you. But this computerized trend line separates the market, above it being the buy zone, below it being the sell zone. So when you're in the buy zone, you're looking to buy with the green signal, exit with the red. When you're in the sell zone, you're looking to sell with the red, exit with the green. However, this is how the strategy works, okay? Every day in the European session at 2 a.m., okay, so you go to 2 a.m. candle, every day at 2 a.m., you figure out the positioning of the computerized trend line. Is the computerized trend line below the candles or above them at 2 a.m. Eastern time every day? Well, where is it here in the market? Is it above or below the candles? Where's the computerized trend line, everybody? Above or below? That's below, right? So below means we're in the buy zone. So we should be looking to buy if we have a green signal. Now, if we're above the computerized trend line and the signal's red, we're not buying. We have to wait for the green signal to buy. So the green signal is already turned on. We place our buy position right there, okay, at the closing of that candle. Then what we're going to do is we're going to place our stop loss 50 pips away, okay, 50 pips away from entry is going to be our original stop loss. So 50 pips, 168.88. 50 pip stop loss. We have our entry, we have our stop loss, and now what we're going to be doing here is we're going to be setting our targets to go after in 20 pip increments, okay? So 38, we'll go to 48 to 58, 68 to 78, 88 to 98, 108 to 18, 28 to 38, and so on and so forth. 20 pip increments. Happen a Y or a yes, if that makes sense. Fee Jocelyn, I know you attended the webinar yesterday, but did you sign up for the grid trading course? The strategy is delivered to those that sign up and enroll. Just to let you know. Okay, so 20 pip increments. So here's how this works. 50 pip stop loss. When the market, okay, strikes your first 20 pip increment, you're going to cancel or replace your stop loss from 50 to break even. Now, since this candle took both the 20 and 40 pip, targets, we're going to cancel or replace our stop loss, okay, to lock in 20 pips. So now we've locked in 20 pips of this move, no matter what, okay? So we have our entry, our stop loss is now right up here, locking in 20 pips. And here, as you can see, this market now fulfills the 40, 60 pip move. So we're going to lock in 40 pips of this move. Cancel, replace your stop loss, lock in 40 pips. Again, all this is in writing. The rules are in writing. And as this market continues to move, right here, it hit our 80 pip target and our 100 pip target. So we would lock in 80 pips of this move. So we've locked in 80 pips. Okay, and then once we locked in 80 pips, the market stops us out. Okay, so this is 5:45 a.m. The European session is from 2 a.m. Eastern time to 12 noon. Okay, yes, Jerry, since you bought the grid course, get with your account rep. I sent them all the information yesterday, so they should be able to email to you immediately today. No questions asked. You shouldn't have to wait 24 hours. It should be, hey, please send me what Jose sent you yesterday, because I sent them to all the account reps yesterday. So if anybody here has the grid trading course, make sure you contact your account rep, because I've got this beautiful gift waiting for you, okay? So there we've locked in 80 pips, and as you can see, it's still green. What do we do now that the market stopped us out at 80 pips? Well, okay, we locked in 80 pips, and it stopped us out. So we have to wait for 3 candles of retracement. We have 1, 2, 3. So what we're going to do here is, whoops, What we're going to do here is keep things very simple. We're going to go ahead and draw our counter trend line and type in a Y or a yes if after the third candle we got a trend line break right there. Yes or no? Trend line break. We enter the market once again with a trend line break. The signal is still green. Our stop loss goes 50 pips away from the entry. So that's a stop loss at 69.72. And then we set our entries in 20 pip increments once again. So we got 21, 41, 61, 81, 91.01. So pip increments. So as this market starts to move once again, as long as the signal stays green, we're buying, right? And no, these are targets to help you lock in profit. They're not pending entries, nothing like that. They're just wherever you strike the targets, the rules will be in writing, right? We've already locked in 80 pips before. And so the strategy is done by 12 noon. So if the market hits 12 noon, you're done. All right, so as you can see here, market comes up, strikes our 20 pip increment. Our 50 pip stop loss is gone. We put our stop loss at break even, okay? How much did we lose on this trade? If we had a break even stop loss? 0, right? So our second trade, break even. What time is it here? 9:45. We still got plenty of time. We also have 3 candles of retracement, so we can begin to draw our counter trend line across the 3 candles of retracement, right? And we'll wait for the market to break that counter trend line. First of all, did the signal turn red right there? Yes or no? Signal turned red, right? That's 10:30 a.m. So the signal turning red, 11:15, close to 12, we're done. We're done. It's red. No more. There's 12. It's red. So we locked in 80 pips for the day, utilizing that strategy. Type in a Y or a yes if you like what you just saw. Don't have to live and die by every candle. Just check back on it if you're going to monitor the European session every 15, 30 minutes or so, you know, depending on what type of trader you are, and then wait for the next day at 2 a.m. to see where the market's at, okay? So, for example, today, where were we? Today, it's 4:26. Here's 1:45. Here's 2 a.m. today, right there. Where's the computerized trend line? Above or below the candles today? We're below, right? Now this works on exotic pairs like this, works on the global 7, works on all pairs, no matter what, works on all pairs. Again, I can't promise you 100% wins every single day. That's why it's a daily strategy. What I can tell you right now is that it is a simple strategy with very little risk involved. So here, 2 a.m., it's above. We place our buy order, place our stop loss 50 pips away from entry, 70.31, 50 pips right there, and then simply put, we begin to utilize 20 pip increments to help us cancel and replace our stop loss. So we have 81, 91.01, we have 11 to 21, 31.41, 51.61, 71.81, 20 pip increments. So the market does this. Here it strikes our first 20 pip increment, so our 50 pip stop loss is gone. Stop loss goes at break even, okay? Stops us out at break even. So our first trade, break even. 3 candles of retracement. Draw your counter trend line. Wait for the trend line to break. There's your trend line break. There's your entry. Stop loss goes 50 pips away. and the increments go in 20 pips. So 90, 100, 110, 20, 30, 40, 50, and so on, okay? And the market strikes our 20 pip increment, stop loss goes to 0. Market goes up to the 40 pip increment, so we lock in 20 pips. Market goes up here too, our 60 pips, so we lock in 40 pips. So here we've locked in 40 pips of this move, and then we get stopped out with a 40 pip locked in profit. And then we have here 1, 2, 3 candles of retracement. It's 9:15. So right now what we'd be looking to do here is we'd be looking for a counter trend line break to take place before we get back in and practice the strategy once again. But today, 40 pips. In the last 2 days, 120 pips scalping in the market. And if the D extension gets hit, this will be a trend line break. This will stay green. Perform the strategy all over again until 12 noon today. Having a Y or a yes if you like this European man versus pip strategy. This is just a bonus to kind of give you guys, you know, my thanks. This is my way of giving back, to saying, hey, if you're going to invest in yourself with some leveling, a strategy to size in, I'm going to give you an opportunity here to have like a playbook of opportunity here, which is wonderful here. So works on any currency pair, any time frame, right? And it's just a wonderful opportunity here to take advantage of the markets. That was pound Australian, you know, pound New Zealand, same technique, right? Where's 2 a.m.? 2 a.m. right here was 1:15. There's 2 a.m. right there. You can see the market here has climbed up so far, climbed up 100 pips today. So you could have locked in anywhere between 60 to 80 pips so far. Still in play, okay? So that's an incredible opportunity, okay? So the reality of the situation is, folks, today with your grid trading course, you're going to get a 30-day money-back, 100% satisfaction guarantee. Okay? We're so confident that you'll love the grid trading course that if for any reason you're not satisfied over the next 30 days after taking the course, okay, and you do not see long-term potential, I'm not talking about 30 days from right now. I'm talking about 30 days from the class, from when you get the grid. If you're not satisfied, we'll give you 100% back of your money. That's basically no risk to you. But type in your telephone number because this guarantee will not last long, everybody. We're doing this for those that are going to get involved in the grid trading course, and we're going to do this for all of you who want to deserve a vibrant and fulfilling trading career starting right now, because eliminate your risk with our guarantee. We have that plan for you to help grow your account, and this will be a $3,495 course at full price, but today we're giving you a discount of $1,250. Okay, it's our second price point up, so the prices already have increased. They're going to increase once again. So take advantage of the red hot low pricing right now of 2245 by typing in your telephone number. This education comes with a no excuses, 30-day, 100% money back satisfaction guarantee. Folks, you deserve to have a vibrant and fulfilling life. When you type in your telephone number right now, you're allowing Josh to coach you through these life-changing principles of the grid trading course. All we ask is that you promise to log in and actually listen. If you simply commit to doing that, you will see results. So make a decision to maximize who you are, what you're capable of, and what you get to enjoy out of this trading career. But don't just listen to me in this web presentation, do it. If you start the education with Josh and you don't feel like it's working for you, you can return the entire grid trading course at no cost to you within 30 days of purchase. Okay? That's huge. Simply contact your education specialist, your account rep, within 30 days and request a refund. The only risk there is inaction, everybody. So again, Margaret, I look forward to working with you. Thank you for your number. Dennis and Bill, thank you for your telephone numbers. Again, the red hot bonuses is the following. Type in your telephone number with the word bonus if you would like to get upgraded to 3 months free of live trading follow-ups with Josh with a grid trading course. That's 3 months with Josh trading live. Bonus number 2 is my man versus pip system that I'm going to give everybody today with the European session rules attached. Everything that I just showed you is written out in clear, detailed format. System will be available to you as well, so you're going to get that as a powerful $1,000 bonus for free just for investing in yourself, and lifetime ownership of the matrix tool, ladies and gentlemen. As long as you have charts, you will always have the matrix tool. We opened this up to 100 spots, and then this bonus is going to be gone. We're getting closer and closer to fulfilling that 100 spot lifetime ownership of the matrix tool. Everyone else, after the 100 is going to be fulfilled, everyone else will have to be charged a monthly maintenance fee. But again, right place, right time, type in your telephone number with the word bonus and take action, and we'll help you with that. So let me recognize the following individuals who are typing their telephone numbers with the word bonus. Lulia, thank you for the word bonus. Lyle, I see your telephone number, thank you. Sohail, if you already signed up for the grid trading course, yes, you can get bonus number 2. Everybody who's already signed up with the grid trading course, contact your account rep. You can get the number 2 bonus there, man versus pips with the Euro session rules, absolutely. I will take care of you, and I will make sure that that gets delivered to you guys as well. Emmett, thank you for your telephone number. Type in your telephone number with the word bonus like Emmett did, guys. AK, thank you for your telephone number. Nathaniel, if you type in your telephone number, Nathaniel, I see your bonus. We need a telephone number to reach you. Michael, contact your account rep, and the rules will be delivered to you with the system as well. Okay. Let's see here. Jerry, thank you for your telephone number also. We'll reach out to you as well. Peggy, thank you for your telephone number. Lyle, thank you for your telephone number. Tibor, thank you. Adrian, thank you for your number. Ken, thank you for your telephone number. Eric, thank you for your number as well. Levinsky, thank you for your telephone number as well, my friend. We'll reach out to you. We have Alex, thank you for your telephone number. Tim, thank you for your telephone number. Ronald, thank you for the word bonus. Thank you, Nathaniel. We see that. Now again, ladies and gentlemen, it's very simple to get involved. Just type in your telephone number with the word bonus, because again, you're going to get the grid trading course, manuals, checklists, class recordings, live trading follow-ups, unlimited class reattendance. You're going to get live trading follow-ups for 3 months. You're going to get lifetime ownership of the matrix tool, which, and plus with my man versus pip system, this makes this a over $6,000 retail price. And with this pricing today at $2,245, you're saving anywhere between $3,000 to $4,000 instantly return on investment when you type in your telephone number right now, folks. So do something for yourself. Your future self will thank you for it, because at the end of the day, it's all about where do you want to be as a trader, okay? We're giving you a 30-day money-back satisfaction guarantee. This is a no-brainer. This is not a should, it's a must for those of you that want to take action, because this will ensure that you have no risk exposure in this market, that you will go ahead and say, if this is for me, I'm going to keep it. If not, I don't want it. But I can tell you right now, with lifetime ownership of the tool and the course, you're going to be in a great spot to make 2017 your best year yet. Here's what we did in yesterday's webinar. Just from sizing into the webinar yesterday, over 228 pips on both the pound Australian and pound New Zealand. As you can see, net profit of 126 was closed out today with the pound New Zealand. I closed out manually with 102 pips on the pound Australian moving forward. Michael, thank you for your telephone number. So again, in the live class, Josh is going to teach you position strategies, swing strategies, scalping strategies. You're going to learn how to amplify your results with optimizing any strategy of your choice with anywhere between a 70 to 90% win rate. And that is huge, everybody, because at the end of the day, we all want to take advantage of the market before the market takes advantage of us. You're going to get a live 4-hour class, on-demand recordings, access to the matrix tool, 3 different strategies to learn from, checklists, manuals, workspaces will be delivered to you, ongoing access to the class for free, and universal, it's a universal form of trading. You can trade directly from your charts, manually trade, alert trade, signal trade, price entries. Folks, we're delivering to you around-the-clock smart technology right now with this opportunity. You're not going to get 1 month access to the live trading follow-ups, which are another 4-hour session here once a month to fill in the gaps with Joshua Martinez, where analysis and trade setups are shared. You get 3 months of that. Why? Because we want you to optimize any strategies. We want you to amplify your results. And if you are a mastermind trader, a leveling student, or a target trader, this is a must for you. If you want to win upwards of 90% of the time, type in your telephone number. We want to work with you, because today is the day you take your life back as a trader and begin to dominate this market like the trader you're on the hunt to become. So, very simply put, yesterday's webinar provided us an opportunity. We capitalized on it. What are you going to do to capitalize on your opportunity coming up next? Well, folks, here's what I want to do for everybody in this room. I want to make sure that everybody's taken care of. So all of you that have typed in your telephone numbers, congratulations. We'll be reaching out to you and helping you out. Remember, you're going to be receiving lifetime access to the Matrix tool. You're going to be receiving my Man versus Pip system and rules for the European session. You're going to be receiving 3 months of follow-up, okay? And also a 30-day, 100% money-back satisfaction guarantee. Now, if you're listening to my voice and you're on the fence for whatever reason, maybe you think you can't afford it, maybe you don't know if it's for you or not for you, I'm going to ask you to have the courage to type in your telephone number and speak with someone about what we can do for you, because it's still April, and we've just got done finished celebrating our 23rd anniversary event. So we do want to help extend the savings. We do want to help extend the party, the celebration. So we want to get this into your hands, and if there's anything we can do to get it into your hands, whether it's a payment structured plan or a one-time payment or a voucher or anything like that that we might have available for you, we can help you. If you need help, type in your telephone number. We'd be more than willing to bend over backwards and help you. I've been told that if it's something you want, we can make it happen for you, and we will break our back to make sure you get it. So type in your numbers, have a conversation, and again, ladies and gentlemen, I wish you all health, happiness, and success. Thank you for your time. Most importantly, thank you for your trust. Okay, and we'll see you at the top. Congratulations to all of you who are going to be investing in yourselves with the Grid Trading course. I'm excited for you all. This is Jose Tormos. This is FX MVP. Stay by your phones, and congratulations.